Hi guys, thanks for tuning in to another episode of Nuggets News. Well, I'm back after a bit of a break. I might tell a bit of a story at the end, but I was certainly a little bit burnt out and felt the need to have some time off, get back into a good routine, come back refreshed, and here we are, back into it. So look, we do welcome a few thousand new subscribers since I last did a video about 10 days ago, I think it was. So I think we have seen retail start to enter the space, which is a good thing. Always be cautious if this is your first time getting involved. And I'd say certainly make use of all our free beginners resources. If you've got friends and family that are going down the rabbit hole, please send them over there. That's exactly why we made all this. We're still putting finishing touches on this. We want to add some more graphics. We've been contacted by some pretty big businesses and corporates out there to integrate this into their websites or courses. So look, the team have done a brilliant job here. Please put it to use. For the more advanced users out there, dive into our crypto research reports or all our other analysis that's meant to save you time. We're going to continue to bulk this out, in particular with what we believe are the best projects that you should have on your radar. Now, a lot of people are still asking about our old 5FA report that we used to talk about. That's been replaced by these, which you get each week. So rather than 5 a month, you get 1 a week, but these are more bulky. They're more thorough, and they are also updated. So all the best projects, all your favorite projects. If there's not one there, you can request one, particularly if you're a member. Do a bit of a write-up, put in the group, get some feedback. That's really how we find a lot of hidden gems that way. Now, I want to give a big shout out to Eric, who is this month's member of the month, and last month as well to Omar. So the member of the month that goes to someone who's done a post that has helped someone else or just put a bit of time and effort for the benefit of the community rather than themselves. That's what it's all about. So we do welcome, I think, 55 new members this week. Over 4,000 in the community. I know some of you just want all the written research. That's fine, but look, the community is still my favorite part of the group. Let's get into the local news. So we've had a couple of the tennis stars that are over for the Australian Open test positive. So that puts a bit of a spanner in the works. They've got to redo that roster, I guess. Let's see how this plays out, because if there's still cases and quarantines, I just don't see how you can get through that tournament uninterrupted. But look, best of luck to them all. We all love the tennis on TV this time of year, as well as the cricket. So it's sport in Australia. Now, COVID isn't the only thing that's been brought into Australia, apparently. So the Vatican are denying any knowledge of this $1.8 billion. And it's always these churches, these tax exemptions and all this offshore money and these hidden bank accounts. And crypto gets a bad rap, but it is just unbelievably clear. The amount of fines that the big banks have got and all these sort of news headlines that we see every week. And there's just double standards. Can you imagine if a crypto exchange had got caught doing what Westpac or Commonwealth had done, where they got a slap on the wrist fine, which is really just, a distant memory now, and a little bit of a speed bump for shareholders, not even for management. There's people that have been targeted in the crypto industry now that are likely to go to jail for serving US customers. It is just so unbelievable, the double standards, and that's something that we really need to speak up and make these people accountable. Australian retail sales have risen 7%. Look, Melbourne reopened, a bit of a bounce back. I spoke about how Aussies will love to go out and spend and try and get our local economy going, and that's certainly starting to happen. Unfortunately, there are still some places that are going in and out of these lockdowns. Major employers talking about delaying that return to the office until February. Think about those flow-on effects. And Australia is a service sector economy, 70% of jobs. So it's the guy that has the coffee shop or the sandwich shop where you go get your lunch. All of a sudden there's no one in that office building. He's got to shut down. He's got to fire staff. He can't pay his landlord. Then that landlord can't pay his mortgage. These are just those flow-on effects because of the Australian economy is just such a service sector economy. We need to really reshape it, and this is probably the big wake-up call that we need to have. This is exactly what I'm talking about. It's the small businesses that are on the brink of going bust. 400,000. So the government, considering these record levels of spending, I just think that it's just been targeted at the wrong things. Martin and I will talk about this again when we do our monthly housing update and actually do some predictions and forecasts as well. But the next thing that the government are thinking about are these HEX-style loans. So for those of you that are overseas, this is a little bit like your college or student loans, where you'll still have to pay them off once a business starts making a certain amount of money. Now, at the other end of the spectrum, you've got the US that are, kind of handing out these loans. So I'd rather see government spending and not really. I don't think you need to worry about that government debt too much, particularly in Australia. It's not that high at this time. You're going to be spending way more further down the line, even on unemployment benefits if those 400,000 businesses go bust, rather than you spending now to give them a little bit of support. So the Morrison government, this biggest withdrawal of spending since World War II, it's the cliff that we keep hearing about, and it's the uncertainty that creates negative sentiment as well in the economy. So this is what we're facing at the moment, and it's scaring central bankers. They are telling the government to, keep that spending going. Don't pull it back too fast. That's going to be very, very bad. Now, they're also saying, be on alert for excess borrowing, loosening of credit standards. This is right as they've scrapped responsible lending. So I think the RBA are now starting to admit something we've been talking about for months or years, that they're between that rock and a hard place where they've dropped rates to zero. They're now printing money. They're creating a bubble in all these assets, whether it's the stock market or the housing market's reinflating very, very quickly. But there's no growth in the real economy, which is what they're focused on. So all it's doing is making housing and everything, cost of living, more unaffordable, actually for the majority of people. So this is just how backwards their theories are of economics. And some countries are starting to wake up to this. And I just think that over the next few years, they're going to have tried everything. It's clear that it's not working. Now they're moving the goalposts, and there's just going to be a need for that reset, as they say, because the system's just not working. Now, here's another example of how much you're going to need for your retirement. Everyone is behind in every age bracket, male, female. Now, the other thing to note here is, again, government didn't want to dip into their own pocket, or they were worried about debt. Again, this is just a number on a screen for all intents and purposes, compared to these people that are now going to be having to get government benefits later on down the line, and the stock market or whatever investments they're in with all this money printing, those things are all roaring. So at least, and I think this is what happens behind closed doors, they'd rather have a stock market that's rampant to help people's retirement and people that do own shares. At least they'd rather have a bubble than a crash. And so when these people have, in Australia, I think it's 20 or 30% of people have drawn down their entire super retirement fund. And so all those people now are just so much worse off than if the government had have been able to help them out in the short term. Now they're also talking about, a home pay or put in your super, considering this opt-in model. It is all over the place. Is this evidence-based, any of this? We need people in the know making these decisions, not some of these politicians. Now, this is a positive. We'd love to see this sort of thing. Largest battery in Australia being built at an aging coal-powered plant. So more and more of this tech, getting towards renewable, creating new jobs. That's the stuff we love to see. China's factory prices fall at the slowest pace in 10 months. So it's pretty clear that they are starting to rebound. They have actually had some cases, but nothing too bad at the moment, they're saying, at least. But boy, oh boy, hasn't this been interesting with Jack Ma and Alibaba. Now, they're going to nationalize this. This is one of, if not the biggest business in China. And Jack Ma supposedly going against a few things, going against the Chinese Communist Party, which you just don't do. All of a sudden, there's reports that he's missing, and now they're nationalising his business. This is why Australia, UK, US, they're warning firms against some of these ties to China and these companies, different supply chains. We're not going to list your stock. Then trying to say, well, we're not going to send our students to study there, or tourists. So, look, no one really wins out here. It's the people in particular that are going to suffer. These second round, third round of lockdowns, some people are still really in their first wave. It's obviously threatening that global recovery. Boris Johnson warning about hospitals on the brink of collapse. So I think some people, because it's not out their window, this is now just out of mind. But it certainly is really, really nasty in a few places. UK, again, closing all travel corridors on Monday. Pfizer's having to reduce the amount of COVID vaccines delivered to Europe. So who gets all this? We knew that it was never really going to be a smooth process. And double dip recession is now on the cards for Europe as those lockdowns drag on. Now, in Europe, they have taken the negative interest rate penalties down another notch. So some of you might remember that when this first came out, it was, it's only for clients with over 1 million francs. And then it's 500,000. Now it's 250. Next year it'll be 100, and the year after everyone. So it starts somewhere and it's going to creep down. In Australia, in the last few bond auctions, we've actually had a few of the notes sell at negative interest rates. So that's the market starting to price in where Australia is going. This is the same in the US, where they had those couple of instances with negative rates as well in their futures markets. So it's going everywhere. And we've said it a couple of times, it's the cleanest dirty shirt in the laundry. Once Australia and the US have got negative rates, basically everyone's got them, and then they're all printing money. So what's the point of even doing all this? Global reset. We need a new system. You can't really hide that it's broken at that point. Ontario in Canada, another one that's having to order these shutdowns, stay at home. Mortgage lenders have set aside a record amount for bad loans. This would be the case in Australia as well if it hadn't been from the RBA kind of pledging that they wouldn't let this happen, or that they're going to end up buying all these mortgages off the banks because banks just aren't allowed to lose. Trudeau's telling Finance Minister to avoid additional permanent spending. So again, differences of opinion here. Some saying just go for it. The IMF, of course, they're urging governments worldwide just to spend as much as you can. This is the inflation that they're actually welcoming now. That's where they've moved the goalposts. So even when the Fed talk about, well, if this happens, if that happens, we'd cut back, things are starting to heat up. I think inflation is definitely on the horizon. And yet some of these Fed members are coming out and saying that we're not even going to think about cutting back our asset purchases at all this year. So that's the kind of stuff that the market just loves hearing. Stock markets booms, but guess what else happens? We've seen food prices accelerating in terms of how much it's costing, and that's where the average person, it just takes a bigger cut of their paycheck. Now with money printing, the stimulus plan, the dollar shorts have broken their records. This week we saw that bounce in DXY, so in the US dollar index that we've kind of been expecting. Now whether or not this is just a short squeeze and it's going to roll over again, I don't think the US economy is actually doing that well now, even compared to others. So jobless claims are now jumping by the most since March when COVID first happened. So they're approaching 1 million. And remember, these are people that got through everything, and this is their first time they've had to claim, and it's still over 1 million. The PPP loans for small businesses, this is the part of the program that just didn't really work well, or small businesses, they kind of want to just injection into their pocket and not a loan. It's all good for a big corporate to borrow more, to buy their shares back, to make money on the other end there because they own all the shares, but it's very different for those small businesses who are reluctant. Hollywood box office sales hit 40-year low. New York taxis, yellow cabs are on the brink of collapse. It's just all these little businesses and industries that are all second, third order knock-on effects. The NRA even declaring bankruptcy, plans to restructure as a Texas non-profit. Now, speaking of guns, didn't we see something crazy last week? So the stock market closed at record highs on this day as well. And this probably just explains how upside down things are, where it just doesn't even matter what happens. Literally, we can see that this building, Capitol Hill, gets stormed, people die. It's out of control, but nothing really matters anymore. If anything, it probably means that there's going to be more stimulus, or we're going to have to spend more on defense, or whatever it is. So, hey, apparently it's the taxpayers that are going to pay for that siege as the government shuns insurance. They're going to chase everyone down one by one. I'm sure they've got all the data and tracking, and they're going to get them all eventually. And hey, where does that all go? It's just such a divide in America. I think it's not just these little sort of extremes anymore. It's almost 50-50 on every topic, and social media inflames that, so I don't know how that ends well. But look, Biden did finally unveil a $1.9 trillion economic and healthcare focused package. Markets love this. This is the sort of thing that absolutely booms crypto and gold. But with all that going on, I think it's hard for the dollar to be strongest when they're probably doing the most at the moment as well. Bond yields are increasing along with that inflation risk and, the cost of food and all those commodities that are going up. So the Treasury yield has steepened to a 4-year high. Investors are betting on growth. All that growth in commodities, that's good for emerging markets. All these traders are now piling into the calls or bets that emerging market stocks and ETFs are going to go up. We're certainly getting to the euphoria stage here. Think about the credit risk. So these are junk bonds. They're falling back to these record lows. The spread between a junk bond and a treasury bond, it should be a lot wider. There should be a lot of risk with everything that's going on. The number of zombie companies, the number of risks out there, but investors just don't care. And it's the same with actual governments here. So Italy's 10-year spread over Germany has dropped to its lowest level in 2016. So even though the government's on the verge of another crisis and they're all disagreeing, they've even spoken about having their own little internal currency. Remember, we had a story last year. But none of that matters. The actual interest rates on bonds, it's just a mirage because the central bank steps in and buys more if those rates ever start to creep up. All stocks are booming now. It's not just those big 5 tech companies. It's the entire Nasdaq. It's all the Russell small caps. They're showing the highest ever price to sales ratio. So people are paying a fortune for the companies that do have sales. Distance from the 200-day moving average. Even the smallest 50 stocks now are at a near record. When's this? Since back in 99. All this is just saying that there's a big pullback coming. Maybe it started, but put to call ratio, again, very, very few people buying puts. Everyone is just buying calls. Everyone wants to bet the stock market's going to go up. Warren Buffett's indicator, it's sounding the alarm. 120% stock market has now topped that global GDP. Same as it did before 2008. We're getting too far ahead of ourselves. Major businesses say they're going to pause these political donations. So all these narratives in the background, whether it's companies or even governments saying we're not going to buy your bonds, or banks, we're not going to lend to that sort of company now, fossil fuel industry, we're going green. So there's all these if, buts and maybes to juggle, as well as the fact we've got COVID and these huge monetary problems. Bank stocks are back in vogue. All of a sudden, banks are making record profits, even though there's less people than ever getting small business loans, and that's the things that banks originally are meant to do. But hey, they benefit from that stimulus. They benefit when interest rates start to rise, and they benefit when government promises to buy bonds. So they just buy bonds and sell it to the Fed, a couple of weeks later, and make a guaranteed profit. Censorship resistance, we've seen Trump deplatformed. Jack Dorsey was talking about that this week. They're talking about building a decentralized Twitter, but Apple and Amazon suspend Parler social network from the App Store and web hosting. This right here is the bullish case for cryptocurrency ledgers like Ethereum that are rebuilding the internet rather than rebuilding money like Bitcoin is. Elon Musk has come out and said, use Signal. So look, WhatsApp, whatever the reason here, Facebook is saying, hey, we're going to just share all your data. None of it's private anymore. So record amount of people have left WhatsApp and started using privacy end-to-end encryption apps like Signal. There's actually a stock called Signal, and it went up 438% when Elon Musk tweets it. So that is just another sign of how mad the stock market is and who's driving price at the moment. Retail investors on very small volumes. J-Power is saying that there's no imbalances in the economy. So this is a little bit like when we had the formal Fed chair, Ben Bernanke, say that there's no problem in the housing market, and then it all implodes a few months later. public trust is crumbling. I think it's clear that even Commissioner Hayne in Australia, after that Royal Commission, said that trust has just been lost in our leaders, in corporations, and it's so true. So when there comes these important topics, or when there's actually something that people should maybe listen to or pay attention to, there's been so much BS over the years that can you really blame so many people for not trusting the government? And then they go off on these other tangents and get stuck down these rabbit holes in social media. Social media keeps feeding them the same thing, and they get stuck in their own little world. I think gold is still going to be a strong performer. It's had a bit of a bounce now. Maybe that correction is over, but despite the big unloading that we saw towards the end of the year, a little bit of profit taking, it's still the best year on record for those big amounts of money. They flow into those gold ETFs that are backed by physical. That means they've got to buy real gold. We don't really mind that style of product. Alrighty, guys. So into the crypto news now. If you are too busy to keep up with the crypto news, guys, don't forget we do have our daily snapshots and our headline analysis to keep you up with everything if you don't have enough time to read through all the posts that we do in the group. This is pretty scary. So many people had their personal details leaked in this ledger hack. But what has started happening is these threats. So look, don't be too worried if you got these. It's a generic letter that got sent out to everyone. So threats about, hey, we're going to find you. We know where you live. Give us all your crypto. Obviously make note of it. Maybe report it to the local authorities just so they've got a record of it. But don't stress too much. It wasn't just you individually being targeted. Now, someone that has got a lot at stake if they can find this hard drive is this UK man. So he's been offering $70 million to the local council, saying, please let me dig up that hard drive. It's got $288 million of Bitcoin on it now. So every cycle it kind of goes up, and he can probably afford to dig up more and more of the tip to find it. They're saying no, it's a hazard to do that. So hey, at what point do you dig up a hard drive with $1 billion of Bitcoin on it? Chinese banks have started rolling out ATMs for the digital yuan, so they are a lot further ahead than a lot of other countries now. That BSN blockchain project is going to pilot a global central bank digital currency system this year. I don't think any other central banks are going to want to use China's system. That's why we now see the US Fed saying that a central bank digital currency is a very high priority for them. And we want to combat bad private sector money. So they don't want, the Facebooks of the world or every business and every probably bank creating their own coin, and that's going to take power off them. So this is what we forecast would happen. And maybe we're going to see, Jamie Dimon versus the Fed, because they both want to issue a coin. And then the government want to issue a coin. And then they're all sort of fighting for power. So that's that theme that we've spoken about a lot. Thankfully, Treasury have backed down on that crypto monitoring rule with the wallets and, really overreaching there in fears of money laundering with FinCEN. So that's not going to happen in the current administration, at least. We've got a new SEC chair, Gary Gensler. So he is very up to date with crypto. Not a huge fan of it, or he maybe sees too many of the negatives and not enough positives. But he does at least teach crypto and blockchain courses. So hey, maybe in the middle. OCC, Brian Brooks thinks that DeFi can root out bias and fraud in traditional banking. So he's described this as like a self-driving car, DeFi of the monetary world. And I think it is true that, like I spoke about at the start of this episode, all the bad stuff in the financial system happens through the banks, not crypto. So that's why they don't want to use a public ledger like Bitcoin, for example, because it would expose what they're doing. Now, one currency that hasn't felt a lot of love is XRP, and Grayscale, who are probably the biggest influence in this space, having to dissolve and sell all that XRP. There's still a few places and countries that are listing it and trading it, but to me, I think that race is run now. Crypto. So another anti-terrorism bill introduced to the House of Representatives. One of our predictions for last year was that this would happen. When crypto grows to a certain point, they're going to pull out, the terrorism stuff. Oh, there's an alt-right group and they received $500,000 in Bitcoin a month before this riot. What about all the crooks in the world or the banks in the world that received $500 million in US dollars cash. It's stupid how you can pick out these little headlines. Tether's bank says that it does invest some of the customer funds in Bitcoin. So I'm actually going to have the CEO of Bitfinex. I'm not sure if he's CEO of Tether as well. Anyway, we're going to have Paolo on the channel this week, and we're going to dive into Tether. So you do not want to miss that interview. I'll talk about that more then. Anchorage has become the first federally chartered digital asset bank. It's the mixture of who's going to become the hyper banks of the world. Is it the banking sector or the crypto exchanges that are going to end up being the big money transmitters of the world? The Winklevoss twins, they're talking about taking Gemini public now that Coinbase is going public. Bakkt also wants to become publicly traded, $2.1 billion valuation. So look, a little bit low, but I don't think Bakkt has really won the community over or been that successful, to be honest. JP Morgan is now weighing in on stablecoin regulation. So just as I spoke about, of course, they've got an opinion because they want the advantage. Mt. Gox creditors can now claim 90% of the Bitcoin left in the bankruptcy. I don't think that this is going to flood the market and crash price anytime soon, but that is one that we'll keep an eye on. A lot of people have already settled some of these claims. A lot of big institutions own a lot of them, so they'll probably auction it off, I reckon. Christine Lagarde, she has done a bit of a flip. So she used to be a little bit more open-minded towards crypto, but now, once again, she's come out. Bitcoin's used for funny business and money laundering activity. We need complete regulation. There can't be any places where it's not regulated. And it's just so funny to watch them squirm as this is happening. IMF are tweeting, are digital currencies real money? 80% of people thankfully said yes. So maybe they're learning about how popular this is amongst the people compared to fiat. PayPal hit 240 million trading volume. So I tweeted this out the other day myself about how much that has climbed to show that retail has arrived. We've got celebrities talking about crypto. Mark Cuban's out there. He was actually talking about Aave and DeFi as well as Bitcoin. So people, gradually this is becoming culturally a bit of a norm. Coinbase have introduced their asset hub. So this is a bit of an open invitation for any projects to apply to be listed. So I think this is another side effect of Uniswap getting all the volumes. More and more of these big exchanges are going to have to list more and more coins of the community and sooner. Polkadot's had a huge week this week. It got up towards $20. It's one that we do like. I've spoken about it a few times and done a lot of research on this. We actually covered it for our members in their research back in June. So when this one launched, I think you could have got it for $1 or $2. And then they did that 1-for-100 swap, because remember when it launched, it was like $160, something like that. So they wanted it to be $1.60. They didn't want it to be $160. And I think this has worked really well. So we've now got a unit bias that works in favor of the retail investor, $18 billion valuation. I tweeted this out saying, hey, I think we need a bit of a pullback, and it's come down to $16, $17 now. Look, long term, I don't mind Polkadot. I think it can go higher, but we've just got to keep those valuations in mind. A lot of these Ethereum competitors or base layer protocols are starting to do really well. So we've spoken in the past about how money flows through in the altcoin cycle. So Near Protocol is one that's doing well, talking about DeFi. Cardano has really heated up. They're getting closer and closer to actually having smart contracts, targeting certain regions, which I really like. Tomo Chain, another one, DEX, interoperability. These are the sort of things where chains are realizing we've got to be at least compatible with Ethereum. And Solana. This one surprised a little bit because it had 90% of token supply come into circulation, but price didn't actually go down. So maybe the market priced that in. Now, another one that, look, I own a little bit of as a bit of a hedge, but and to play around with it, I'm not opposed to any of these little layer one chains, but a lot of people said this at the start, that Dan Larimer jumps from project to project, and EOS saying, no, he won't. Well, Dan Larimer has quit Block.one, and EOS fell 16% on the news. Whether or not it's a clash of personalities, hey, Block.one have still got a massive war chest, well into the billions of dollars, so they're well funded, but EOS has been a massive disappointment considering the amount of support it had from big investors as well. Another huge news week for Red Fox Labs. Benny did a video update to check out. So their e-commerce streaming in China partnership. They've got the game launching this week. Getting into this whole like virtual augmented reality shopping is just an absolute huge part of their business that a lot of people just don't realize when they hear NFT or games. K-pop sensations getting into these, minting their digital collectibles on Polkadot. Again, culturally relevant. Rick and Morty creator are now selling NFTs on Ethereum. Deadmau5 teaming up with Mad Dog for NFT artwork. Everyone is getting into this stuff. Our friend GT, so if you're a long-time member, you'll know GT. They had a bit of an art meetup this week. I think we need more crypto meetups as soon as the COVID completely goes away and now we're in a bull market. Maybe another excuse for us to have a national roadshow. Cloudflare unveils this gateway to distributed web with Ethereum name service and IPFS integration. So Cloudflare hosting is now compatible with the Ethereum name service. So if you want to buy, your business name or your personal name .eth, like you'll buy .com, that's now integrated with Cloudflare. So I love ENS. It's a great concept. Handshake is a very similar concept, but we've actually had Sci-Fi leave after 2 days citing centralization concerns. So there are one or two of these that are more centralized compared to ENS. And that's, again, one by one, we're kind of seeing problems with governance or centralization. And they become obvious when there's more money at stake or more projects or more personalities that clash. And decentralization, the importance of all of that is becoming the clear winner. Aragon acquires a voting project to flesh out decentralized governance. And then we actually had the founder walk out, I believe. So I'm waiting to see what happens there, but there's been a lot of, it feels like a lot of infighting for a project that's all about, settling confrontations or matters like that. So kind of ironic, but I still like Aragon. I think DAOs are going to be a huge theme for this year. Nexus. So we haven't heard of Nexus protocol for a while. So this is different to Nexus Mutual. This is just Nexus, and they're building that decentralized internet. So once again, now we've got the software, blockchains to help us. We need the hardware to build an unstoppable information age, digital economy. So Nexus want to launch these little cube satellites. Then you've got your ground stations. Then you've got like mesh networks and relays. So everyone can have one of these, or someone in your neighborhood, and we're all relaying the internet to each other. So the government can't, shut down the internet or turn off the internet. This is the censorship resistance world we're going into. We need privacy. Tornado Cash launched their token recently as well, but this is a project that not many people know about, and privacy on Ethereum is just so important these days. We found that out this week, like I just touched on before. Telegram saw 25 million new users in 72 hours after that WhatsApp news came out about privacy and how they're going to be sharing all your data. Multiple DeFi projects have cracked the top 20. So this is another prediction of ours that the top 10 or 20 with all those ghost chains are going to get replaced by all these DeFi projects with billions of dollars locked up and heaps of users. So it wasn't really that much of a stretch to say that, but it's happening in slow motion now and taking people by surprise. Bancor, another upgrade. Swap fees exceed impermanent loss insurance costs. So they've got single-sided markets now, so you don't have to do the pairs of liquidity, and helping to prevent that impermanent loss where if you're a liquidity provider and token prices move too much, you lose out. They can now help prevent that. Sushi have come out with that roadmap and their update. They are doing a heap. I just love talking about this one because of how much crap I copped for saying it had good fundamentals, and it's now up over 1,000% since those lows, since I was stuck by it and said that, hey, this is a good concept and good fundamentals, and good on Sushi. Cream Finance, another one with a funny name, but these projects need to be taken seriously. They've come out with this corporate debt Iron Bank launch for you Game of Thrones fans. So this is a new protocol that will allow you to borrow funds without posting any collateral. Now, obviously that comes with trust and reputation and on-chain, but a very, very interesting concept. Scaling solutions are starting to roll out. Optimism has launched for synthetics. We're soon going to see Uniswap and others follow, which I cannot wait. Once we have the big projects all scaled, that's going to free up the blockchain so much. Hermes network is another one that's helping to scale Tether and these stable coins. Now, into the demand for crypto. eToro had to warn their users that they might not be able to buy as much as they want this weekend because they just can't keep up with the demand to buy crypto. So during the week, I tweeted out that exchanges are running out of ETH. A lot of people picked it up. I was just going off the data that I read every day at Crypto.one. Apparently that was a mistake one of those days. Apparently it was one of Bitfinex's cold wallet. But either way, the trend is still down. The exchanges are running out of ETH, just not quite as quickly at the pace that a lot of people, including myself, thought. Gnosis has received $2.3 billion of Ethereum in a day, and they're now the third largest holder of ETH. So this is Gnosis Safe. This is one of their projects or products as like a decentralized multi-sig wallet to store Ether in. Nexus Mutual have expanded their coverage to more of these centralized exchanges, which is awesome. I'm going to have Cover on the channel soon as well, another project that's doing that cover or decentralized insurance. Tor-enabled Bitcoin nodes are back online after a bug. Now, you wouldn't have heard about this if you only follow Bitcoin Maximalists because, hey, they're always at Ethereum about having bugs. Nexus Mutual's had plenty of bugs and hacks. But look, this is why I spoke about this specific thing in the interview with Raul. So this was probably my favorite Real Vision interview that I've done with Raul yet. I think it's on Real Vision Crypto. So if it is, that is free to sign up for. So head over and watch it. The evolution of Ethereum. So a bit more of my backstory, a bit more about Bitcoin and Ethereum and how I've seen the two evolve over the years and why there are these sort of clashes and tribes. RSK token. So Rootstock is doing smart contracts on Bitcoin. They're doing, NFTs. This is the one that Red Fox is working with as well. They went on Pomp's podcast and spiked 30%. Another project that's doing similar is Stacks mainnet. So bringing a little bit of smart contracts and DeFi to Bitcoin. Now, you can't do everything you can on Ethereum, but I am excited to see just, a bit of experimentation on Bitcoin. Rootstock has been coming soon for 6 years, for those of you that didn't know. Bitcoin mining. So we've got it coming to the Arctic. They won't have any problems keeping it cool there. Galaxy Digital, Mike Novogratz, they're also getting into mining and launching financial services for those miners. And Coinbase is investing in a US-based mining firm. So remember how we spoke about hash rate becoming geopolitical and a lot more would be coming to the US? That is now playing out. Goldman Sachs wants to enter crypto custody, so they've followed, Goldman, JP City. Guess what? Remember in crypto winter how we said that all these guys are, poo-pooing crypto and saying it's, crap because they can't make money off it yet. And as soon as they have the setups, the custodies and whatnot, the products to make money by charging clients fees, they're going to get into it. They're going to start talking positively. I think, was it City the other day put out a price target of like $300,000 or $400,000? Guess what? They want retail to flock into Bitcoin so they can make money off fees. They never lose. Canada's Bitcoin fund has hit $1 billion. Grayscale's had another record fourth quarter, $3.3 billion. So money is certainly coming in. Deribit have actually added a $400,000 option. Maybe it was after one of those banks has called that. So maybe we should tell those banks to put their money where their mouth is and buy these $400,000 call options. Last couple of things I want to mention, the on-chain data. We've seen a lot of stablecoins going to exchanges the other day. That was kind of another positive, another reason why I thought that maybe we're going to have at least that bounce coming soon and it wasn't the end of the bull market. We had $2.75 billion worth of liquidations the other day, 24 hours. So this is where all those fees come from, guys. Hey, it's nice to be in exchange, isn't it? That much in fees in not that much, but that much in liquidations, you're still going to make many millions of dollars on fees. Now, during those liquidations, Bitcoin whale addresses have been accumulating, so they still haven't really sold. We've seen, medium and even some of the larger accounts take some profits, which is all healthy, but whales continue to accumulate. Another thing that was very interesting that I just wanted to point out here, if I can. No, okay. What we did see, I might scroll down and see if I can find it. There's some good data just showing the amount of coins that have moved to Binance, and they were specifically the Bitcoin flowing from other exchanges like Coinbase. Here we go, from to Binance. So this shows us that this is the altcoin exchange, and everyone's sending their Bitcoin there. So this is a bit of a sign that, yes, investors are now starting to think about rotating into altcoins if they're sending that amount of Bitcoin from all those other exchanges to the number one altcoin player. Let's have a look at the weekly chart just quickly. Let's clear all that clutter. This is starting to look a little bit similar to the 2017 top. So I do acknowledge that. Look, we're going to have the daily close in an hour from now, probably when you've already watched this, but we do have an okay sort of bounce forming here and this week. Look, I don't think it's to the stage yet where we say this is the top, because we haven't lost this uptrend. Look, some people will argue that we have, others will argue that we haven't. I don't think it's too bad. As long as we're holding these and these wicks are being bought up each time, keep going into those lower time frames. A lot of those head and shoulders patterns that people were worried about, didn't break down that way. So I do think that this is still a bit of a shakeout. And I don't mind if Bitcoin's here and it's ranging for alts to go, happy days, that's what we want. The on-chain metrics that I post about multiple times a day in our group, they're still looking okay. There haven't been a lot of people sending coins to exchanges. So there's no real reason to fear that just yet. Let's have a look at the ETH Bitcoin ratio. This is our guide to how altcoins are likely going to perform. And at the moment, this is broken out, and we had this sort of bull flag. We've broken out again. Let's see if this can continue to trend higher. This gets us up towards those record all-time high ETH prices that we've been hoping for. So guys, that's it from me this week. As I said at the start of the episode, look, I got pretty burnt out mentally, just working too hard, losing that work-life balance. So be careful that you don't do the same. Appreciate some of the kind messages I got. It's just really important to keep those healthy routines, the exercise, the meditating, the diet, the sleep. You get out of it and you forget how bad you feel pretty quickly. So look, I do appreciate everyone understanding. That's the longest I haven't made a video for since I started the channel 4 years ago. But back in the swing of things now, and I'll talk to you guys again soon. Head over to nuggetsnews.com.au. Check out the Collective Shift new platform if you haven't already. But have a good day, guys, and I'll talk to you soon.